Good morning, and welcome to episode 91 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 28th, 2022. Last week, exactly as expected, Fed Chairman Jerome Powell and the Federal Open Market Committee raised interest rates by 0.75% or 75 basis points. They also announced that by the end of this year, they expect the rate to be at 4.25% to 4.5%, and by next year's end, they expect the rate to be at 4.5% to 4.75%. Well, this is nowhere near enough to go ahead and take down inflation, which is somewhere between 8 and 10% when you look at CPI and PPI. And as a result, everything last week got sold. The Dow is down below 30,000. The S&P is nearing 3,600. The NASDAQ is below 11,000, and all precious metals are down for a week. Let's take a look at the pricing, and then I want to get into a question that was a follow-on question from last week. So prices today, gold is at $1,629.50 an ounce. That's down from $1,675.50 last week, down 2.75%. And that's the big winner, folks. Silver down 6.75% to $18.29 from $19.61 last week. Platinum, the big loser on the week, is down 10.5% to $848 an ounce versus $947 an ounce last week. And palladium is down 5.25% to $2,154 an ounce from $2,273. With silver falling 2 to 3 times as far as gold did this past week, we see the gold-silver ratio, the number of ounces it takes of silver to buy 1 ounce of gold, went up to 89.53 from 85.83 a week ago. And the biggest winner of all last week was the US dollar, up to 114.40 from 110.57. And that is the highest level we've seen for the US dollar index since 1985. And that leads into the follow-on question. So last week on episode 90, I handled a question for a client, and there was a follow-on by James. He said, John said he would have been better off staying in cash, and that seems about right to me. Rich says gold and silver are doing their jobs in this environment. Correct, Rich did say that, and Rich does believe that. What am I missing here? And basically, the answer to John's question is the horizon. When you look at the US dollar and you see its strength, it is undoubtedly the strongest asset out there right now is holding cash in US dollars. The problem is it is a temporary state. When you look at the fundamentals of the US dollar, they are not strong at all. This is a temporary state relative to other currencies and not exactly relative to gold. I mean, gold is down versus the dollar, but not on the order that the dollar is up for the year against all other major currencies. So gold is doing its job. It is deflating in an asset deflationary environment slower than other asset classes. And when things turn inflationary, right now it's consumer, not asset inflation. When everything turns inflationary, you will expect the dollar to really do its job. Part of the problem here is it's not just about interest rates and cooling off the economy. As I mentioned, we're heading to a stagflationary environment. Part of the problem is getting interest rates up above inflation, which cannot be done. It cannot be done with a $30 trillion debt. We can't service the debt if we get up above inflation at about 10, 11%. The other problem is we're not solving the problem. We're treating this with a Band-Aid, and what we need is real medicine, because we're going to go ahead and raise a debt ceiling so we can spend more money, and that is the root of the problem. We have to stop the excess spending. Until that happens, I only have one question for you. Got gold? All right. As always, we want you to go ahead and subscribe to us and like us on the YouTube channel. Send us your questions and comments. Thank you, James. Thank you, John. Everybody benefits when you ask those questions. Go ahead and follow us on our social media and our newsletter and alert services. And please, whatever you do, don't ever forget that getting rich starts with keeping what's yours.